Okay, for fun, let's say I'm looking at this and I want to buy. Let's say I'm going to take a little bit of risk on this. I'm got my long uptrend line, but I'm going to buy on this day here. And we're going to do it as a paper trade, so we're all having fun anyway. So that's good. There won't be any money at risk. But let's say we're doing this long trend line, gap down. We're going to put a buy order in here, but and maybe we'll let it ride a little bit, or maybe we'll have it set to sell pretty quickly. So if we wanted to, let's say, buy this in a paper trading thing, you well, first off, on the bottom here where it says like paper trading in TradingView, you could set that up and you can set up paper trading. We've got that already set up. But let's say I want to buy, right? So the red here would be sell, and I don't want to sell. I want to buy. So I'm going to click on buy. And then I got my different types of ways I can buy, like a market order, limit order, and let's do a market order. We'll just take whatever the market gives us here, right? And let's say, because this is all fun, this is all mythical. Let's say I want to do 100. I want to do 100 of this at 160. Let's see, what is that? We'll see what it ends up being. But right now we're looking about 163.59. Now what I could do is, instead of, let's say 100, let's say I'm really not sure of it, I could do 50, and then if I could then buy back in. If it goes down, I might have another spot where I buy in, or if my things are looking good, I might buy in with the other 50 and keep running up an uptrend. In fact, let's do that. Let's just do 50. So let's just do 50 and see what that is. Now take profit and stop loss. Take profit, I can basically click that and I can set a price. As far as, you know, if I wanted to have, let's say, an upper level target, maybe I say up here I want to take profit at 173 or something. But let's say I'm looking at this long term and I want to let that ride up, so I might not put a take profit target in there. By the way, the price, usually I would input the price as far as what I want to buy or sell at. Pips is basically just the distance away from the current range. So I'm not sure anybody really does pips. Some people do, but I like to put in the price. But one thing we definitely want to do is we want to put in a stop loss. So we're going to take profit off, but we're going to put a stop loss at the same time. So let's say right now we're at 163, 58 something. It's defaulting to this, but that's way too low. So let's say I'm looking at my chart and I say, well, I want a stop loss. You could do something like 2% below the current trading price, like the kind of the way of the turtle way, as far as different things you'd learn in the stop loss lesson. Or maybe I want to look at the last significant low, which would be either right here, last time we hit that trend line as far as the significant low, or maybe because I'm looking at long term, maybe I want to go right here, right? Maybe that's what I want to do. I want to go as far as right in this trend line here, and at this price, which is what is that, about 157.11. So let's say, whoops, what did I do here? Oh, I'm moving my thing around. Sorry about that. So let's say I want to sell. If it breaks through this line. Then I want to sell at that point. That's a pretty significant, 163 to 157, about $6. So it's about a little less than 5%. So let's do that. Let's do that. Let's say we're going to put it at 157. In fact, let's go a little bit lower than that as our last significant low. Let's go to 155, because this might be more of a support line. We don't really know that yet at this point. We're just having some fun here. But let's say we're going to put it at 155. So that's my stop loss to make sure I'm not having some big disaster. So I'm just going to put it at 155. 00 is what I'm going to do. So right now I'm putting a quantity buy order of 50 in there, and it shows the percent of the total you might have in your whole equity thing. This is paper trading, so you can see it's a very small amount. They give you like 100,000 or something like that for paper trade for fun. But right now I'm going to buy a quantity of 50 in there is what I'm looking to do. 50 units or 50 shares. Look like we're right around this 163.58 in that range, and we're going to put on our stop loss at 151. So we're just going to, for fun here, click this. Oh, you can see my trade value here. So this trade's going to be about around $8,176, depending on when I click the button, because these things are always changing. And I'm going to click and I'm going to buy it, and then we'll see what ends up happening. You can see on the side here, you can see that the orders are placed. And you can see it was bought, sell, that there's, all these different types of orders are executed and modified. See, there's a stop there and a market order, and so that would be executed. In the real world, this is all executed very quickly because it's paper trading. It's no real money at risk. Something like a Johnson & Johnson would trade probably that quickly because it's a heavily traded security. If you're looking at, like, say, a penny stock or something that's not traded as frequently, that may take longer to execute. Or if I put in a quantity of, let's say, 1 million, that's going to take a while and maybe fill through multiple orders. So take a look at the order section as around that. But right now we've got our order in, and we'll see how that does. We'll go under paper trading here, and you can see about Johnson & Johnson, the New York Stock Exchange. I have a buy there. This was the average price, was 163.52 is the average I got. I got a stop loss at 155, and last price 163. So no profit yet, or there would have been a little cost to maybe putting the order in. So no profit yet, but we're still early, right? So very early, especially since we're considering this to be a long trade. So we might not look at this for a while, but we'll take a look and see how it does maybe over the next couple days. So either way, that's how you do it pretty simply, and you can see it shows on the screen. You can either have that on or off too, and we could buy or sell some more or go on to the next security, and we'll see how we do. Oh, by the way, I hope you really caught the whole thinking part through this. So if it doesn't work out the way I want and it goes down and goes below this, I can be okay with it because I thought this through and I have my stop loss in there, so I don't have to beat myself up. It just didn't work out as a trade, but I had thought it through. And I knew this was a little risky because it wasn't as firm as far as a long-term trend line is good, but the short-term trend hasn't developed yet, and we have a gap down. So I'm praying on the long term, but you can see how I'm thinking through this. And if it goes up from here, I'm going to feel real good. I'm going to think I'm real smart with my logic. But if it doesn't, that's okay too. I'll lose some money. I'll make money on the next trade. And just to have that positive attitude of like, yes, but I'm thinking through this. I'm not just trading to trade. I'm trading with a plan around that. And that's where the stop loss is one part of the plan.